Hey guys, Crypto Sniper here. This video is in response to an article by Muyao Shen, March 17th, that's yesterday, 6:42 p.m. It's about an event that saw South Korean blockchain analysis CryptoQuant refer to a 1.1 billion transfer that they believed that was being moved to the New York-based Gemini Winklevoss exchange that would lead to potential selling. CryptoQuant has a Telegram group with over 28,000 people and are being accused, not by me, but by some traders have accused the firm of sending a false alarm filled with panic-inducing fear of uncertainty and doubt. People are upset that they referenced this 18,961 Bitcoin. It's caused a kerfuffle, they say, about it. A free Telegram-based service and also some premium service. They've undertaken to check out a little bit more closely whether it was an internal transfer or not, and not make pronunciations as to the viability of the direction or the implications that might amount to such an amount being moved to a Gemini exchange where most people assumed there would be a subsequent sell-off. Willie tweeted, "It's the second time it's happened in the last 30 days. Markets selling off due to bogus data." So Willie did not appreciate it and is criticizing them. Here are the two events. They're in the red there. I will circle them for you further just to make them apparent. And we will highlight them on our charts. The apex there. Look at the big volume that then occurred as a result of whatever it was that they said. In both instances, big spikes in volume just shortly following this. Now, the thrust of this video is simply this. Well-constructed technical analysis versus Telegram group FUD news reactionary behavior. Now, you can stampede like a herd of steers or an entire cluster of lemmings off the cliff if you want, but I'm going to say to you, there's another way. There is another way, and it's called technical analysis. I have my own method of how I bring about technical analysis, but there are a lot of traditional aspects of technical analysis we use and have adapted that have nothing to do with me and existed well before my time in charting. But you can be part of those, losing 2 billion in liquidations in February sell-off or 1.6 billion in the week that just passed. By virtue of reacting to the likes of CryptoQuant and other groups that might be bigger, smaller, etc. There's 28,300 people on there. But the truth of the matter is, I don't think any of this really has got anything to do with the fact that the market was establishing a localized high. On that very point, on the 11th of March, as I've already referred to once, we highlighted why Bitcoin 60K was a key level. And we did that on the 11th of March. You will see the 11th of March is round about here. And that wasn't a big ask beyond. We had already said that it's basing and you should enter for recovery. That was on the 1st of March. That was the candle that you could have got on. That was a day later when it broke, and the very small return move the day later on the 2nd of March. And since then, you will have noticed that you had this head and shoulder. And can I tell you, in expectation, as price behavior futurists that are continually scenario casting what might come next, we had already established our neckline and wanted to see if this was to be a left shoulder, the head returning to a similar level and just running. And in that sense, we got a beautiful shooting star there. You can see after running our 51,500. We take a logical round number that best sees the shoulders being met or just surpassed. We subsequently got another touch with a small pullback over here after a deep dip right shoulder, and that was telling us it was ready. At that point, at this point here, and even at this point here, if you assumed you were going to come back to this point, you already could have had the target of 60,000 people. You already could have had that as a key tactical, technical target, 60,000. Long before the event that occurred there and the other event that was before that was responsible, they say, responsible for the sell-off here. By the way, 50,500 neckline of that head and shoulders that ended up causing this spill all the way down into the left shoulder here, the head, and the subsequent right shoulder that we're showing you there. So how's it something technically gave you a key level well before anyone moved 1.1 billion? So is it really the movement of the 1.1 billion, or is it just the number of buyers and money on the sidelines that have committed themselves in this up leg, during this up leg move, for which there are now reduced amounts of cash on the sidelines and maybe small reasons for jittery sellers? We were already well on the way to a head and shoulder here, left head, and we were waiting for the right shoulder. I was watching it on a Sunday night going into a new week where you often take new directions. Let's walk the walk of this up leg into that reversal and see how much of it really had to do with quant analysis of Bitcoin address movements. And that's not to say I say it's worthless analysis. It's not to say that these people, both the critiques, Willie Woo and quant analysis, aren't exceptionally bright people. The point is, are they applying that intellect in the right way? When technical analysis already gave you exactly what you needed to know well before that, a localized high. We were expecting a localized high marginally higher than the previous high. And there was your previous high, there's the line, and it was run. And you did a wind up to get above there. Let's cover that. So, in my world, what happened? Well, apart from the inverted head and shoulders and the break, you also had an ascending structure here across these two highs. So you had an event where you clearly passed the 51,500 and just passed the 51,500. And you had this one where you hadn't made it as far, but you were winding up. Guess what? You could have bought the breakout of that point there. You would have captured the move. You would have a little bit of a pullback on that 51,500, which was such a key level. You would have made the interim. Then you would have gone into a grind, a less convincing move. This was powerful. This was grinding. Top of that grind then ended up making the legacy neckline of the previous head and shoulder to the left. Guess what? Time to take a rest. You came back and rested on that second interim level. You went up, you went up, you went up. You then made the final HVF target, not the inverted head and shoulder 60 grand target, that's there. You made the final target and just touched run the 57K. Another key round number, a pullback. So you've met the 55.5, a pullback. You met the 57K, a pullback. Everyone following me? I'm sure you are. Let's drop down a time frame and just analyze what came next. So here we are. We're at that 57,000. We now have another winding up HVF, which was drawn. There's your RH3. There is your RL3. Boom, you break. You could have been back long, leveraged, high leverage, or you should have carried the trade the whole way. I carried the trade the whole way. You can add to positions here. Interim surpassed. We passed the 59.5. We passed the 60K. Amazing. 60K now made. You have now made this HVF target 60K. You've run the 60K round number, a key end of 10 round number, often a place of rest. Plus, you've run the inverted head and shoulders that formed and was finished and we covered on the 11th of March on this YouTube over here and told you 60K was the key level. On the 11th of March, good people, here it was. There it is, why 60K is your key level. 11th of March was over here before even this structure set up. So is it really the events here, or is it just too many buyers that have come on and there's no new cash coming in? And then people get skittish and they panic sell. Yes, left shoulder. By the way, inside this, you also got a small fractal in here. You get a very small wind up, which gives you a tiny bit more profit that calls eventually very close to the all-time high. throws down a funnel. Where's its low end of the funnel? You guessed it, that 60K level. That's the fourth line that is set up of pattern-based analysis according to HVFMethod on the 60K level. You get this funnel broken. First it supports there, then it plunges through it and also touches the 59. That's the second 59 touch from there. That's an armpit after the shoulder. That's the point where you come down. That was the armpit. That's your next armpit for the end of the head and the beginning of the left shoulder. You bounce back, you come down, you touch it again. You have you grind up, you make a marginally higher high. You get your first out of the rising wedge skittish sell-off. You get a return move on the rising wedge, yet fail to take out the right shoulder high. Then you break the neckline for the second time after breaking it here. This is classic price behavior. What's the target? It tells you you should make that level. You surpass it, and guess what? You're revisiting the 57K level. Isn't that fabulous? And the 55,500, this blue level over here. You end up in the form of an entrapment box between the two levels. You've run the 55, you snap back, you resist it at the 57, you run back down to the 55, you support it, you can't make the 57. Next thing you realize you're in an inverted HVF and you're squeezing in a downside direction. It's a continuation pattern to the bear side. Your target is here. You smash it down. You run the 55,500. You make your second interim. You make your final target and you're done going down. What do? You go back up and you kiss the previous 57, which was the target of the ascending HVF. That was part of the right shoulder of the previous inverted head and shoulder. That 57 is now your new neckline on a new head and shoulders. This is called key levels of significance. This is what people don't understand. You should study price, not indicators. In you go up. There is your new head and shoulder with a very deep right shoulder, it might be said. It wasn't comfortable, but so it goes. There you go. There's your break. Again, for that, this could and should generate an upside target as well. Where's it going to rest first, however? Well, where's the next key level that you put really big and in blue for everyone to see? Hold on, we had a neckline here. Okay, so we are expecting a squaring up continuation out of here as our on balance of probabilities, highest probability, like that. Okay, so we're expecting a secondary high that won't necessarily run this one, but will be at some key point. How about the 59,500? How did you do? Whoops, 59,561, run by $61. What's happening now? An easing back down. So you smashed it out of here. You started grinding higher through a number of key levels here. You can see them there, the interim and a legacy target, up, 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 up. You finish at the 59 and now you're pulling back. Did anyone launch an inquiry as to why we broke up here? No, that was the Fed, the dumbass Fed. Everyone expecting them to be serious about inflation. They obviously don't give a hoot. They can't afford to pay the interest. If they were real interest rates, they're obviously going to lie, cheat, and be late on the inflation. And of course, suddenly that gets confirmed by Mr. J. Powell. Pumpity, pumpity, pumpity back up. A lot of this ground that was given up so cheaply now being partially reclaimed as people vacillate in their schizophrenia of panicking buying and panicking selling in and out. And guess what? The traders that understand key levels of significance can do basic charting, end up doing just fine. Whether you look at this as inverted head and shoulder here or a W pattern, you could also take the view this is a W. It's not a perfect W bottom. This one is a little bit, a fair bit higher than that. But you could still get some potential geometry. I would take the smallest shoulder and project it to the upside. So there's everything that can be done technically. Was it all about this? That just is toe tagging. I call toe tagging, you can't have a dead corpse lying in the road. It has to be picked up. You have to know what it died of, who the person's name is, and the next of kin have been notified. The minute a cop tells you, yep, we got the guy, his name's John Doe, he had a heart attack and fell over while walking his dog, and the next of kin have been notified. That deals with everybody's mental cognizance. You can't have an event that's got a negative overture that goes unexplained. It's like a dead body lying in the street. It needs to be identified, collected, named, toe tagged, next of kin notified, then all is well again and life moves on and people can forget about it. That is it. And this is association. It's association that 1.1 billion was it. It was soft. The market was soft. It made a head here and couldn't hang on. Even before that news broke, you had fizzled back that second degree of move. You pumped really strongly, surpassed the 60. You had already fizzled back your A to B, your B to C. That was your C to D leg. You had already fizzled your C to D leg back all the way back here. This was something losing momentum that had overextended, had made a new all-time high relative to the 58K and running the 60,000. That's why you are where you are. This is, I don't know, chit chat and fear that to generate work for journalism. This is journalism. This is finding a reason. This is creating a narrative, a drama. It is a kerfuffle. The answer is in the charts. This is why we do technical analysis. You can find out how to do it. Go to themarketsniper.com. Click on the link below that says book a call. Book yourself a call, start doing it for yourself in conjunction with other rational people that aren't stampeding like lemmings in and out of the crypto market on every little Telegram group's news, FUD, etc. You can be someone who is a reactionary, or you can have the script before on a probability basis. There are no guarantees. If you can understand that, you might be ready for what we have to offer. Otherwise, keep reacting and best of luck. I'm glad you're out there. My trading account smiles. Thanks for watching. See you on the other side. Links are all below. There's a free mini series as well. If you don't have any funds, we do also a self-study program at a much lower cost where you can just get up on the theory. You still can attend a Sunday afternoon, a Sunday session with us to get a little bit of interaction, and the non-farm, which includes traditional markets and the crypto finds every month with me in person for better part of 3 hours. And we keep recordings. Thanks for watching, and we appreciate shares. I hope you enjoyed the vid.